Let's talk a little bit about why I trade futures markets and why you should consider it. Really, futures markets are the best way to trade the biggest, most major markets, whether it's the U.S. markets, treasuries. You've got the indices both in the U.S. and internationally, DAX, FTSE, um, the Nikkei, all have futures that trade, and these are really probably the best ways to, and the vehicles that drive the prices for these major markets. So the S&P 500, when you hear it on television, is not. It is the future that sets the price that they're reporting every day. So we're not going to go through every one, but whether it's Forex futures, there are commodity futures like beans, corn, wheat, meats, the softs, the cocoa, etc., sugar. All these are tradable. These are these are the major markets in the world that allow you to behave. The other thing that I like about them is you can use them for short-term income, long-term, and medium-term income. So because of the component in futures, you're able to trade them and have a high leverage, which is a good thing, but in a different way in my mind. So leverage is a good thing, which really allows me to participate less, meaning I don't have to trade as often because of the leverage. So I look at it from a reverse perspective. Leverage doesn't mean I have to trade more actively. It actually means I should be more selective, pick my trades, and when my trades happen, I tend to make more money in a short period of time. So I prefer to trade less and earn more. Has really always been my philosophy. So keep that in mind. Just because you have high leverage, we really focus on the risk side of things and try to keep that to a minimum. Liquidity is a huge piece. So you've got the most liquid markets, especially in the indices and the treasuries. These things are pretty much trading 24/7. They close for 15 minutes to settle every day, and outside of that, they're regularly pretty much open. Now, some of the soft commodities have a little bit different schedules. They're not open 24/7, but close to. So there's less the liquidity provides less gap risk, is what I would call that. So really something to consider. You get a lot of gap risk whether you're trading stocks or options, and not a good thing. Um, the price ranges, the tick values, they're defined for each commodity, so you need to know that. You need to know what they are. The leverage and the commissions, because it is a highly regulated industry, you've got a lot of professionals hedging. It's very transparent, so you know exactly where you stand with your broker. It's clean. It's a very good on that sense. Your cost of doing business is seriously reduced by having this fantastic opportunity. Now, there's no day trading rules either. Now, I don't encourage people to trade for profit if you really, aren't if you're not, trading with at least $100,000, it's going to be difficult for you. There's still no easy, quick fix. It's a slow, methodical business, but you have to be well capitalized. However, there is no day trading rule, so you can trade 100 times a day if you want. Now, again, we would never recommend that, but you can do that with, $25,000 or $5,000 in many accounts for that matter. So there's no hard and fast rules. You don't need to get borrows because you can hit the bid, you can take the offer. So it's one thing about futures. There is no borrowing like you have in stocks to short sell. If you want to sell something, you just hit the price, you hit the bid that's right there. So that liquidity is key. The key correlations with the global futures markets again are there's both correlated markets and non-correlated, and these are really important points to make. That you can do a lot of pairs trading, these types of strategies longer term that can really provide a lot of upside and contain some of the risk when markets are correlated or uncorrelated. Now, right now, a lot of the correlations and uncorrelations are really thrown out the window. It's kind of an interesting time and space. So you need to think about that. The tax benefit obviously is huge. There's still the government wants these futures markets to be really the most free and trading markets because they truly are the bazaar, the auction of all the products that we're trading. So the government gives you really a 60-40 split, and the reporting on futures is so easy. You basically take in your multiple. If you have one brokerage account for futures or multiple, you take those into your accountant, turn them in. You've got one sheet of paper basically with a number, and that makes it really nice and clean. And the tax benefit is huge. So you've got to consider that. Why, like if you're trading the SPY or you're trading the Qs, I have no idea why you don't trade futures. It just blows my mind. You got liquidity, you got better tax treatment, and you're gonna get better execution. Not necessarily trading 24/7, because I don't do that. I mean, I'm not putting positions on all day, all night, unless there's a reason. So um, most of the time, again, the tax benefits, the liquidity, these are the main reasons why I and you should consider portfolio risk management. Again, if you're involved in other markets, buy and hold. This is a way to hedge that and get some activity. Don't trade stocks. You're going to get eaten alive with the cost and of doing business. Think about futures as if you're looking to drive some income and have a business. Futures is the way to do it versus stocks or options. There's just too much risk. There's too much overnight risk. There's too much carry risk. The cost, the risk of how much paperwork you have to turn in on every single trade you have to report. You have to list out every single trade when you're trading stocks and options. You don't have to do that with futures today. Now, regulation can always change, but in today's world, this works so well. So these are the best reasons. Executions are clean, they're simple. You can hit the bid, take the offer, the transparency. You've got central exchanges that are very well oiled. This is not a new business. You can trade around the world. So if you wanted to trade the DAX, the FTSE, and then the Asian markets, those are available to trade. There are so many futures. We stick with the primary 40 or so liquid ones that we focus on. It's a real small world for us. But again, these are traders' vehicles. True traders trade futures. And if you want to run your business like a true trader, consider futures and why we trade them. These are the key reasons. And again, give us a call for a free consult. That's 728-3218-541 area code. And if you have any questions, that number's on our website, marketprofiletradingacademy.com. We'll give you a 30-minute consult, figure out what you're trying to do, help you out. And again, futures is the way to go. Don't waste your time in your business and your money in these other markets.